We've got a great show for you today. Fantastic guests in the studio. One of my good friends and local expert in the real estate community here in San Diego, Gary Kent, is in the house. Mr. Everywhere. If he hasn't trademarked it yet, he sure should. Gary, what's going on, my friend? How you doing?
Doing okay. How are you?
Are you having technical difficulties over there?
I am. I just started and my headphones don't work. This is terrific.
Here's the good news. You only need the headphones if I do something like this.
Okay.
Or like this.
Hate it.
Did you hear it?
Yeah, it's already worth coming by. Just
All
to hear
right,
that.
there you go. All right, good stuff. So, Gary, we haven't been on the air together for like 2 or 3 years, I think, at least.
That's true.
That's unfortunate. That's a shame. So I have a lot of catching up to do today. Gary has some awesome stuff that he's willing to give you for free. We'll tell you about that a little bit later in the program. Also in the studio today, you're a familiar voice who you heard on the show yesterday, who hosts every Thursday, Mike Bendix with Bridge Equities. Mike, what's going on?
Hey, Derek, I'm proud of you for playing hurt. Good job.
Yeah, not bad, huh?
Willis Reed and Kirk Gibson and Jack Youngblood, they got nothing on you.
No kidding, right? And I showed you the tooth. Is that one of the most disgusting things you've ever seen?
It's not. That should not be public. Trust me.
I told the dentist, he rips the tooth out of my jaw, and he's holding it and he's looking at it, and I go, I want to take that home. And he looked at me like I was crazy, and he goes, this is hazmat, son. I can't let you take this home. If you touch your face after you touch this tooth, you will get an infection, and it will be bad. I mean, that's how bad this thing is.
You probably shouldn't mention his name. He probably isn't supposed to do that.
I'm not mentioning anything.
All right.
I'm not dropping a dime on my dentist, all right? He did give it to me. It is in a sealed container, though, you should know. So there was a really funny back and forth today that I had in chat with a listener, and I posted it on Facebook just because, it was funny. It's anonymous. But this is what he said, and then I'll let you guys chime in. And this is what the post is on Facebook at facebook.com/Mr. Credit Radio. Listener, Mr. Credit, should I buy Apple on this dip? A lot of people talking about that. A lot of people asking about that. Once $700 stock, now $540 and change. Should you buy it? It's down significantly. Okay. My answer, sir, I wouldn't buy shares of Apple with your money. Listener, for real? ? Me? 100%. Listener, damn. Aight then. I thought it was hilarious. So anyway, my answer is not interested in Apple. Mike, do you have a comment on that?
Well, I'm not interested in the stock market right now. Scares the heck out of me, and I want to go things that are whose performance is based on the underlying asset, not the whims of everything else. And Apple just kind of goes along with the rest of the stock market today. So I would be a no.
No on the Apple. Gary, I imagine you probably like real estate in this market, don't you?
Yeah. If you want some stock advice from me, just look at what I do and do the opposite, and you'll make a lot of money.
The Fade Gary. We'll call it a fan club. We'll call it the Fade Gary fan club. Or we'll do exactly the opposite of what you do. You let us know what you buy. We'll do the exact opposite.
Perfect.
I thought about doing that one time. I had a guy who was coaching me when I was trading futures. When I first started trading futures, a guy was coaching me. And I said, I seem to get it wrong, exactly wrong, over and over. And he said, well, that's perfectly normal because of natural human emotion. You got to train yourself, to not do those things and think that way. I said, wouldn't it be easier for me to just train myself to do the opposite of my natural emotion? I mean, if I'm losing every single time I'm trading, and I'm like 8 or 10 trades in a row, shouldn't I just do the exact opposite of what I'm thinking I should do, and wouldn't that be a winner?
Statistically, if you were to actually track that statistically, that would work. If the people sell at the wrong times and buy in the wrong times, and it is something that's talked about a lot on stockbrokers, that happens all the time. We always sell when we're not supposed to and buy when we're not supposed to, and that's why long-term investing is always something that people say, get it in there, make your good decision, and let it go.
Yeah.
Don't let your emotions decide when you're going to buy.
Trading's too hard.
It
Bottom
is.
line.
It
is. Trading's too hard. That's why we talk about things that are more stable. We talk about buying a home not as to sell it next year for a $100,000 gain, but as a part of your retirement plan. We talk about investing in real estate securities because that's a set investment, something you're not going to go in and trade, or emotions aren't going to get in the way of your investment. You're going to make a dedicated plan up front, and then you're going to execute it. Here's something that you guys might be interested to hear. The net wealth of U.S. households rose in the third quarter to its highest since late 2007. Okay, net financial wealth in the United States grew $1.7 trillion to a total of $64.7 trillion, according to the Federal Reserve, as of yesterday. Now, that household wealth 1.2 trillion short of where it stood in the fourth quarter of 2007, and this was, when it was at its peak. So we are only $3 trillion away in household wealth, and only $3 trillion away. But I mean, it doesn't seem like it's that far from our all-time high. That's a pretty encouraging sign, isn't it? I mean, you can't argue with that.
We had a nice run up on the stock market. That has a lot to do with it, because remember that there was a time when the stock markets took a little crash there, and so we've had a nice little run on the stock market, and that's a big part of it.
And I imagine that they're including home values within this wealth calculation too, Gary, and we've seen home prices go up quite a bit in the last few years as well.
Yeah, definitely. I mean, I don't necessarily follow every city in the country, but I think most cities are on their way up, and they have been for a good year or so, including San Diego.
San Diego was up over 10% year over year recently, right?
Yes.
Yeah, and I mean, we don't see any reason for that to stop anytime soon based on the inventory situation. How bad is it really, Gary? Because I have a lot of people tell me a lot of things, okay, with regard to the inventory situation. Shoot me straight, Mr. Everywhere, Gary Kent. How bad is the inventory situation?
It's so bad. Okay. It's depends on the price range. There are certain price points where there are very few homes for sale, particularly the entry level. It's not uncommon for a home to go on the market and 5 to 10 offers. I have a property right now, a duplex. We have, I think, 7 offers on it. So that's not uncommon. And then there's different segments of the upper end that are like that. This different slices is interesting. In some price ranges, it's low inventory. In other price ranges, it's still a bit of a buyer's market.
Really?
Yes.
What price ranges are still the buyer's market?
Some of the upper end segments, and I don't have the stats in front of me, but
like outside of conforming loan limits, like getting up to like jumbo limits and stuff like that.
Into the pay cash range.
Okay.
Yeah. Where the three of us together wouldn't be able to buy a house.
Come on, man. I got good credit, baby. We can make this thing
I hope
happen.
You've got good credit.
We can make this thing happen. Well, that's very interesting to me. And I tell you, there was an article in Yahoo Finance that I thought was a little bit overcooked, honestly, that I was reading last night, where they're talking about the recovery, and we're still in a recovery mode as far as housing is concerned. Of course, this is national talk, and San Diego is very different. That's what we're trying to do, is localize this information. So the recovery in housing, they say, is dependent upon continued mortgage debt cuts by the banks. In other words, people are so upside down that in order for the recovery to continue, the banks have to continue cutting down mortgage balances for people. I have a feeling that might not be true in San Diego County. Gary, what's your feeling on that?
Yeah, I don't know if I follow that logic so much. I mean, by cutting down the balances via short sale, we are getting more inventory, but I don't know. I didn't read the article. But basically, we are recovering. I think it's very much interest rate driven. And you throw in that rents have been going up. I've been in the business 28 years. For the first 26, if somebody wanted to buy, say, an investment property, the question would be, well, how much is the negative cash flow if I buy it?
Yeah.
But for the past couple of years, it's been how much is the positive cash flow. And that's because rates are so low, the payment is low, and rents have gone up.
You're so right. I mean, 5 years ago, you looked at buying a rental property, there was no way you could cash flow the thing. I mean, you had to put 30, 35% down. It was crazy. I mean, people were upside down an unbelievable amount. And this is, not putting any money down and all that stuff. And even getting low interest rates. It was just crazy where prices were with regard to rent. I think rents have caught up. I think they were too low. I think rents got too low.
Well, it depends on whether you're a renter or not.
Well, I mean, during the boom, I think they got too low because it was too easy for people to buy a house.
Yes.
And so the rental market was just like, well, why would anyone rent when everyone can buy a house? And so I think it overcorrected on the low side. Now we're starting to see, I think it's a healthy market. When an investor can go and buy a house and rent it out and cover the payment, I think that's a healthy area to be in, don't you?
Yes, definitely. We've been having a lot of people buy investment properties and getting positive cash flows.
Yeah. So, that's good stuff. I mean, for people who are investing in real estate like that here locally, and there are a lot of them doing it. I mean, we know investors are buying up properties like crazy. In fact, to the extent that they're pushing some of the buyers in the market out of the place. People are having a harder time getting their offers through. But it starts to make sense. And when you see the investors buying the property, okay, you can kind of ride their coattails like we do with the securitized investments. It's like, okay, they're doing the math. These are the guys, they're bringing in big cash. They're doing the math. They're saying it's a good time. Investment only. No emotion. Investment only. It's worth it for me to buy this thing, right? That's a good sign. That means someone who's paying way more attention than you are is saying, I want to buy real estate right here in San Diego County right now. And by the way, Gary, you said you've been doing real estate for 28 years?
Yes.
You have many accolades, which I can't recall all of them, but you recently have moved over to Keller Williams.
Correct.
And I imagine you like the Big Red that's going well.
Definitely.
And I have seen, and by the way, in Gary's office, I have personally seen typed letters, typed by a typewriter, from the early 1990s, love letters from clients littered across the wall about people who did short sales with you in the early 1990s.
True. Yes. In fact, the first short sale that I did, which was around 1991, was a client of mine named Russ. I won't say his last name,
Sure.
but he had been in banking, and he was upside down, and I had never heard the term short sale, and he said, here's what we're going to do. We're going to contact the bank, and we're going to tell them we don't have enough to pay them off. And I said, you can't do that. They'll never agree. Well, he handled everything, and it's like, okay, I guess this can happen. So I did a lot of short sales in the 90s. Needless to say, very few from about 98 to 2007, 2008, but then I've been doing a whole lot of them since, and they're fun.
What's different about the short sale market that we were in the early 90s versus the one we're in right now?
Let's see. In the early 90s, they weren't really that common. People didn't understand them. But now it seems like home buyers are more educated, agents are more educated, more comfortable with them. In some cases, I put up a home for sale that's a short sale, and it seems as though there's just no hesitation. They treat it almost as though it's a traditional sale. The home buyers do.
So it's just become more knowledge, more common knowledge now.
Yes.
Okay. Yeah, interesting stuff. And I tell you what, here's the thing. We're going to tell you about the first thing that Gary will give to you today for calling the helpline. If you're interested in how to sell your home for top dollar and fast, I like that he puts the word fast in there. How to sell your home for top dollar fast. This is a free guide. All you have to do is call the helpline, leave a message, obviously on the air. Leave a message with your name and number and your email address, and we can deliver. Gary will deliver this to you. It's 100% free. How to sell your home for top dollar fast. If you're interested in speaking with Gary or getting this free offer, call the helpline, 888-888-0154. It's 888-888-0154, or you can always email through MrCreditRadio.com. When we come back, trip to the moon. How much is that worth to you? Well, there's people selling it now. Are you going to be a buyer? We'll make you smarter than everyone else when we come back. It's your lunch hour, Mr. Credit, ESPN 1700.
If you'd like to speak with Mr. Credit, call 888-888-0154 or email through MrCreditRadio.com. That's MrCreditRadio.com.
Adam, is there any truth to the rumor that they're going to fire Norv Turner? Or was that disproven?
Well, based on what we saw last year, the guy that reported the story, Kevin Acee, said that Norv was going to be fired. It didn't happen.
Okay, so it's BS.
I think there's legs to the story.
You think there's legs? Okay.
I think he has a source, and it's a source inside the organization, and I think it's going to happen. It's just not going to happen till the end of the year.
Imagine the party that San Diego will throw if that actually happens.
Yeah.
Imagine that. I mean, you make everyone so happy so quickly, and you turn around a franchise so quickly by making one simple decision. I mean, what's the problem? Is he like married to the guy's daughter or something? I mean, what is keeping him from making this? Is the easiest decision of all time. Unbelievable.
They had to announce it right before season ticket sales go on sale for next year.
Yeah. Little timing in there, right? So this firm, by the way, is now selling trips to the moon. This is no joke. It's like a 3-day odyssey to the moon. $1.5 billion for a group of guys to go to the moon for a few days.
Oh, it's not just one person. So
No.
so three of us could put in,
pull in
I don't know, maybe 500 million
500
each.
million each. And then we could go to the moon. Hey, life's about experiences, Mike, not objects. What do you want to make some good investments?
Can't
with that
take
money
it
or
with you,
something?
right? I'm good for my $500 million.
You're good for your half
Yeah.
bill. Gary, are you in?
Could you float me part of that?
I don't know if I can. I think there might be some other things we could invest in, Mike. Namely, commercial real estate, passive investors, as low as just $10 or $15, even $25,000, people can invest in this stuff. Here's the questions that I have for you, though. Now we talk about commercial and REIT investing and securitized real estate investing for people who already own a home. They want to invest more in real estate. For people who can't buy a home right now because they don't qualify for a loan because they did a short sale or foreclosure in the past couple of years, but they want to buy real estate. They know it's smart and makes sense to buy real estate right here. And you do that. This is your specialty. And you've been helping people do that on this show for quite some time right now. And it's something that we're putting a lot of the people that we know into because it makes so much sense. Now, the demand, one of the things that we've never really addressed, the demand for real estate. There's obviously only so much land. There's only so much. The demand for real estate, does that fluctuating have an impact on the investments that people make in commercial real estate like it does in residential?
Certainly does. And before we go, I want to make sure that your segue, if you do invest that money, you're not going to get $500 million, okay? So let's just make sure that the $10,000 investment isn't going to turn into that. Your segue scares me. Yes, the demand, it fluctuates a lot, and let's distinguish from the two kinds of demand. One of them is the demand for actual use. Which is companies moving into a building, if it's an office building, or it's the CVS moving into that standalone place on the corner. And then the other demand is demand for investment dollars. And cap rates, when they talk about cap rates, which is the determining factor in value of commercial real estate, it really all that is how much an investor is willing to accept in his yield. That's what a cap rate is.
Okay.
You take the net operating income and you divide it by the cap rate, and that's your value. So the demand for investment dollars, for investment yield today in commercial real estate is extremely strong. And that's for a couple of reasons, namely the stock and bond markets. The stock market, relative to where it has been, is fairly high. Even though we've had a little correction here of late, we're at 13.1 today, okay? Pretty darn high. So people are starting to say, "Ooh, is that really where I want to be?" Your Apple thing was a perfect example.
And you talk about the yields, and that's what people are really looking for. A lot of people nearing retirement, they want that income off of their investment. They want some sort of safety. Buying pieces of paper doesn't seem to make sense when the words fiscal cliff are mentioned, multiple times in every news broadcast without even anyone flinching. You really want to buy a piece of paper? Or do you want to buy something that you can look at, something that you could touch and feel that exists regardless?
And whose performance, where the performance of the investment is based on something that has nothing to do with the whims of the stock market. So there's the number one piece of demand for yield. And the second one is the bond market, relative bond market. And we talked a lot yesterday about what's happening there on the air. And we are at certainly all-time historic record lows in the way rates are. Well, bond yields are going to be negatively affected by an increase in interest rates. So that's not a good spot to put your money either. So there is a huge demand for the income component of commercial real estate, and that's why people are flocking there.
Yeah, and it makes so much sense. What's cool about this, though, the thing that I really like is that you're totally in charge of your investment. You know exactly what you're getting when you buy it. You can look at the menu of options that are available to invest in, choose the ones that suit you the best. Maybe you want to invest in the one that's in L.A. because you can drive up there and on Sundays and check it out, make sure the building's still there. Maybe you want to invest in one in Dallas because you got friends there, and they can go check on it and make sure that it's still there for you. I mean, you get the option to invest this money and spread it out kind of where you want to. And by the way, Mike will give you for free, if you call here's the number. You just call Mike directly. It's 855-462-1031. He'll give you the top 10 markets for opportunities in commercial real estate investing. Top 10 markets. This list is 100% free. 855-462-1031 is the number. So what about building? Commercial, not just the actual buildings, but building new commercial real estate. If that starts to happen, because there is such a high demand now, okay, it's starting to make sense. A lot of people want to get involved. A lot of the big boys, the Wall Street firms and stuff like that, they're getting out of stocks, they're going into commercial real estate. Could that affect the types of investments that are available or the availability of these types of investments to regular Joe Schmoes like me out there?
Yes. In any real estate cycle, top of the market, it's already built and it's already fully leased out. then things go the wrong direction, right? We start losing tenants and everything. So we don't start building again until we have occupancy increases. Frankly, with the exception of the triple net properties, which are already fully leased, and the multifamily, which has done a really good job, there is still a lot of vacancy in the other asset classes.
There is.
Oh yeah, there's
Right
lots
now.
of vacancy. Absolutely. So your value add opportunities might be in office, because there's an office building that used to have an insurance company and a couple of lawyers in it and everything. And those guys have all, there's some telecommuting, there's some correction in how many people they have working for them.
I got to tell you, I don't like that. I don't like the office space play right here, because you're right. I mean, you see these buildings. I mean, you walk into these buildings downtown, entire floors are empty, and you go, "What the heck is this? Who used to be here?" And it's like, "Oh, the law office just moved out."
So that's that can only be used for, I think today, a very long-term value add play. You're not going to get much cash flow because it might be only 50%, but that's your capital appreciation. That's buying it and hoping that 5 years from now, then when it becomes fully leased. Because the other problem with commercial real estate that is in the office world is that there's tenant improvement costs that are required. Mm-hmm. Whereas if someone's going to move into an apartment building, or that CVS is going to occupy something that was previously occupied by somebody else, there's not that much tenant improvement stuff, right? Someone moving into a building, an office building, they need new carpet and they need all these other improvements to it. So you can't invest in that today and know that you're going to get a short-term return, because there's going to be lease-up issues and there's going to be tenant improvement issues. So that is very much a value-add, long-term investment.
More of an aggressive strategy versus like going with a building and investing in a building that's fully leased.
Hit it down the middle of the fairway is the multifamily and the triple net properties today.
Okay, and so that would be more for the people closer to retirement age.
Absolutely.
Okay. Hey, talk to Mike for free about this stuff. I'm telling you, if you don't have real estate in your portfolio, even if you already own a home, especially if you already own a home, or if you can't buy real estate on your own for some reason, this is a great way to invest in real estate, know what you're getting into, have the ability to earn cash flow and appreciation, take advantage of tax advantages and everything else that's associated with it. 855-462-1031 is the number. You can also just ask for this when you call, the top 10 markets for opportunity in commercial real estate. Mike will give that to you for free. 855-462-1031 is the number.
There's another thing I want to mention about this, because I listened to what you said a few minutes ago, and I really liked it. Illiquidity of real estate has sort of a negative connotation. People, that's an illiquid investment. I view that as a feature. You don't want your entire portfolio to be illiquid. When I sit down with a client, I want to make sure that he's got some money for a rainy day, and maybe quite a bit, depending on where he is in his life. But the illiquidity feature is actually a good thing. It means that we have made the decision that you just talked about to go into this property. We liked it. We're putting it in there, and we know that that's not something that we're going to look at for 5 years. We're going to enjoy our cash flow today, and we're going to see our appreciation down the line. But I view it as that chunk of my portfolio. The illiquidity is a feature, not a negative.
I agree 100%. And if you don't know anything about the fourth asset class or investing in commercial real estate, securitized investments in commercial real estate, call the person who I know knows the most about it, Mike Bendix with Bridge Equities, 855-462-1031. When we come back, of course, we'll make you smarter than everyone else. We've got more from Gary Kent, Mr. Everywhere, when we come back. It's your lunch hour, Mr. Credit, ESPN 1700.
If you'd like to speak with Mr. Credit, call 888-888-0154 or email to MrCreditRadio.com. That's MrCreditRadio.com.
Welcome back. Thanks for hanging out. Mr. Credit here. Gary Kent, Mike Bendix in the house today, making you smarter than everyone else. It's guaranteed. Don't forget, we're giving away $500 cash. That is on December 20th. You can register for free at MrCreditRadio.com. Anyone who emails a question through the contact form on MrCreditRadio.com will automatically be entered. If you don't have a question or you're too afraid to ask yet, that's fine. You keep listening anonymously. There's nothing wrong with that. But you can also enter to win the $500 cash on December 20th right there at MrCreditRadio.com. It's 100% free to enter. So, Gary, it seems to me like this low inventory circumstance, the next logical step in most real estate markets would be the builders would start, firing up the tractors again and start building some new houses.
True. San Diego it's a little bit different because we don't have as much, and this is a word, I don't know if I'm going to be able to say it right, developable land
Well done.
as other areas do. For example, in Phoenix, they can just keep building, I think, forever. They just keep going in any direction, and there's more dirt or sand to build on, but not quite as much in San Diego.
Yes, and so that's kind of the challenge, right? And that's also the reason why it's good to buy real estate here, because you can't get drowned out by stuff like that. Although I do think if they were to start, building more new construction, of course, it's going to be south, southeast, and there's just a lot of east and north. That's pretty much the only directions you can
Not
go.
west?
Not west. And as far as I know, I mean, you could build some piers and they could do something interesting like in Thailand or something. But if they did that, it would help values a ton, right? Because construction costs right now are pretty high. Mm-hmm. And so even if they're going to these outerlying areas and making building affordable type homes, it would still increase values across San Diego County because they would have in construction costs. I mean, just the cost of everything it takes to construct a home has gone up so much, and that's why we've seen so many people getting appraisals done, especially on the refinance side. Mm-hmm. Getting appraisals done, and the cost to build their home is significantly more than what it's being appraised for. And so that, to me, it would be just kind of like, hey, I mean, maybe this is where we start talking about granting money and giving money to all these programs and stuff like that. If there was a way to kickstart that with all the people who want to buy houses, what do you think? I mean, would that have an effect on the market, a good one?
It would create more activity because people would have more options. I think it would definitely benefit home buyers. I mean, I look at the supply and demand. If you increase the supply, then that would be something that, in theory, now going back to my degree years ago, which is in economics, the professors would say, well, given the set of circumstances, you get this result. And then you'd say, okay, I get it. And then they would say, however, if you apply this other theory, you get the opposite result. So I'm just going to say this is a trend, and that is that if you increase the supply, that should help hold prices down as opposed to go up. But there's going to be other things like more people working that could, stimulate things and cause prices to go up.
Okay, yeah, good point. If you add to the supply, makes sense, Mike.
And the other piece of it is that you're going to have to be able to, builders can only do this based on what they can buy the land for. And so assuming that they could buy the land for a price that makes sense, then they can go ahead and sell it and introduce it. But the worst thing in the world would be for the builders to have to do what we did before, which is create inventory that just sits there and then they go bankrupt.
Yeah. No, good point. And the home builders have been pretty, just in what they've said, they've been pretty pessimistic, but they've all been building. And so I don't know if they're just playing politics, like saying, well, it's tough out there, but they're building homes like crazy, and making money again. I mean, the home builders have run up a lot.
Home builder stocks.
They're doing
have run up.
multifamily though, mostly.
Exactly. They're doing other stuff. They're also doing. It's interesting. They're trading the dirt. They maybe aren't building, but they're developing. You buy a 5,000 unit master plan community in Phoenix. Great opportunity, and you then sell those 5,000 units in 500 unit chunks to 10 other merchant builders. So they may be making money out of it, but not necessarily putting up sticks.
Okay, gotcha. No, it makes a lot of sense. They've definitely been ringing the register, though, that's for sure. So it would be good for home buyers, Gary. But let's talk about home sellers for a second here, because this is a tough, this is a market where home sellers are being told, it's a seller's market and all these things are going on. But I know that home sellers are making mistakes. We talk about first-time home buyers all the time. We never talk about first-time home sellers.
That's why I'm here.
Tell us what some of the selling mistakes that people make are and how to avoid them.
How long do we have? 3-4 hours?
We've got as much time as you need, my
Okay,
friend.
great. Okay, the first mistake I think that people make, and that is, it's a good idea to talk to several agents before you choose one to sell your home, but there's something that everybody should say to an agent or to the agents they talk to, and that is, I just want you to know I'm not going to choose an agent based on the price that they tell me my home will sell for, so I want you to be honest with me. That's not going to be a factor, because too often people choose the agent that tells them the highest price, and that doesn't mean it's the right agent for them. It just means it's the one that came up with the highest figure.
Right.
So that's one big mistake that people make.
Okay, so choosing an agent based on how much they tell you your home is worth.
Yeah, and so they should just tell agents up front, that's not how I'm going to choose.
Should they not even ask the agent what they think the home is worth? Should they just interview them for what they've accomplished, testimonials, get a feel for them as a person?
I love you, man. That is so true.
Is that the right way to do it?
Yes, definitely.
Okay, so don't even ask them. Because in the end, your home is going to, especially in this market, your home's going to sell for what the market will bear, right? I mean, there's so much demand. If they have any concept of how to market it, that's a good question to ask. How are you going to market my home?
True. And I'm going to say they do want to ask them what it'll sell for, but maybe not have that be the first question, have it be the last question, and again, not the deciding factor.
Okay. What else?
Okay, there's a few, and that is another thing. Once you hire an agent, there's something you can say, and you should follow through that's going to get them to work a lot harder. And that is to say, if you do a good job for me, I'm going to refer you to everyone I know.
Nice.
And I know that I work as hard as I can for my clients, but I think if I work 110% for my clients, if somebody said that to me, I might work 111%.
Okay.
It might make a little bit of a difference.
So let them know that they might get some free marketing if they do a good job. Tell
Yes.
them you'll endorse them on Yelp or LinkedIn or something like that.
Exactly.
Just dangle a little more of a carrot than the commission check. I like that. That's good stuff. That's out of the box, Gary. Good stuff, man.
Yeah. I've got another one for you.
Keep coming.
Okay, I'm going to tell a quick story. This happened, probably 20 years ago. Some people, and I hope they're not listening, they had me over to see their condominium, and I looked at it and I said, it's really lovely, but I have a suggestion. You need to do something about the pet odor. And their response was, we've never owned any pets. So they ended up not hiring me to sell their condominium. But the key is, or what I'm getting at is, I recommend to people when they talk to agents to say, I want you to offend me. Tell me the truth. Don't hold anything back. If I need to have my home, cleaned, I want you to tell me that. If you don't like the color of my paint, tell me. Whatever it is, I want the honest truth. If you don't offend me at least once, I'm going to be doubting whether you're being honest with me.
So how do you tell a client that they smell like a dog?
It's a little
Sir,
tough to do
you
that.
stink. I just want you to know I hope it's the house, because if it's you, actually, if it's you can just bathe, please. We can't give the house a bath. No, odor is crucial. I mean, the way things smell, a fresh coat of paint, this is why I always say a fresh coat of paint is like the easiest thing to do, right, to touch up a home, because you get marks on the walls and stuff like that, and you throw a fresh coat of paint on, and all of a sudden it starts to smell newer.
True.
That's a big thing that you can do that's usually pretty cheap, and you don't even have to paint the whole house usually, but just some of the main areas, and it can make a big difference. So you're right. I mean, the way that things smell has a huge effect on people, and their first impression is going to be that, because when you open the door, there's no stopping it. I mean, you're essentially creating a backdraft, and whatever smell is in the house is coming out. So good stuff. What else you got, Gary?
Another thing is not understanding that price is half of the marketing. And I've had some situations where I've advised a client, your home is going to sell for X, it's going to sell for $500,000. And they say, well, I want to ask $575,000, and I'm not able to sway them that that's not in their best interest. So we start at $575,000, and then we don't get a lot of action, and they say, well, you're not doing your job right. Well, the truth is price is half the marketing. You can do everything right, but if you're priced too high, you're just not going to get much or any action on your home.
Yeah, and if you go a little bit lower, you can kind of get people engaged, right? More people will see it, because people who are looking at certain price points will be able to see the home. And then they'll also have more traction, so they might fall in love with that house. You get, maybe a little bit of a contest going on, and you get more people, right? I mean, the lower you price the home to start, remember as the seller, you have to accept the offer. So you don't ever have to say, yes, I'm taking an offer, right? I mean, that's a good point to make for a seller. I mean, you could take that guy who wants to sell his house for $575,000 and say, hey, listen, we're going to list it for $500,000. If we get offers for $545,000 and you don't want to take it, don't sign it. But let's see where the market's at. I like that idea. Good strategy. So that's half the marketing, in your opinion.
It is. It
Yeah.
is. It's something that that I have never had the guts to advise a client to do, but I think could actually be a strategy, but I'm not recommending it on the air. And that is to actually underprice your home, because I've had a few situations where, for various reasons, say it was a bank foreclosure where the bank set the price and it was priced too low, and they actually ended up, I felt, getting higher than market value because they had such a swarm of people making offers on it. So,
and then there it goes, and that's where it just proof of your point that price is half of the marketing. Great stuff. Now, also, we've got 2 free guides that you can get from Gary. We told you about the first one already: how to sell your home for top dollar fast. He's also got a strategy for how to sell your home without ever even putting it on the market. Let's say you don't want a for sale sign in the yard. Let's say, maybe you're upside down on your home. You don't want people to know you're selling. You don't want to have the conversation. Gary's got a strategy for that. He'll share it with you for free. Gary Kent, Mr. Everywhere, 28 years selling San Diego real estate. You can access him for free through the helpline. 888-0154 is the number. Just leave a message with your name, phone number, email address if you want, brief synopsis of the situation. We'll get you over to Gary right away. If you want a true professional who knows what he's doing, he's been doing this for a very long time and through multiple short sale cycles here and knows how to get this stuff done, he's someone you can count on. 888-0154 is the number. It's 888-888-0154. When we come back, we'll continue to make you smarter than everyone else. It's guaranteed. Mr. Credit. Be right back.
If you'd like to speak with Mr. Credit, call 888-888-0154 or email through MrCreditRadio.com. That's MrCreditRadio.com.
Okay, so what would you do? This is amazing to me. This guy in Austria, bus driver. Okay, everyone gets off his bus, right? He's driving to the next destination. I guess wherever you park the bus, he makes his last stop. He's looking through the bus, and he finds a bag, and it's just like a satchel bag, almost like briefcase size, full of cash, over $500,000. Well, some 390,000 euros or whatever. It's over 500 grand. Okay, and he turns it in. He turns it in to his company. Okay, so you're a bus driver, so you're not making necessarily a lot of coin here, right? This guy has the chance. It's cash, untraceable. Someone has left. Who knows when, but they're gone. $500,000 cash. Would you be tempted at all? 500 grand at your fingertips, you're a bus driver. No?
Tempted?
Yeah.
You'd be lying if you didn't say you were tempted. Would you do it? Hopefully you would say no.
Hopefully not. Yes, hopefully not. But I'm talking, have you ever seen 500,000 cash?
No.
No.
I've seen $100,000 in cash. It's the most I've ever seen. It's surprisingly not that big. It's actually pretty disappointing how small 100,000 in cash is. But it's still pretty impressive.
Are we allowed to ask where you saw 100,000 in cash?
It was this drug deal I did back in the 80s. No, I want it's a guy who was a flaunty guy. He was one of those bad mortgage guys, from the mid 90s, and eventually they put him in jail. But he bought Ferraris and did all this stuff, and he liked to do things like that, like come to a get together or a party or something like that with a briefcase full of cash and tell everyone I have $100,000 on me.
Now I might be tempted to take it from him.
Yes, there were a number of thoughts that ran through my head in those circumstances. But in this case, what it turned out to be a little old lady's life savings. She cashed it out of the bank, and she was carrying it in a bag, and she left it on the bus. Can you believe that? She was in her 90s, $500,000 life savings,
Wow.
almost completely gone. Someone needs to tell this woman about PayPal or escrow companies or some sort of, there's no reason to walk around with $500K. There's just no reason.
And if you were walking around with it, how can that not be the only thing you're thinking about?
Absolutely.
I mean, this thing here, okay, my little briefcase, attaché, whatever you want to call it, you probably couldn't even fit 500,000 in here. You could probably, if you had hundreds,
Let's try.
You could maybe get like 150, maybe 100 grand in here. But so we're talking about a pretty big bag. I mean, there's no way to miss it. Like a duffel bag almost.
Oh my!
And She left it on the bus. Well, the bus driver turned it in. She was so thankful they tipped the guy a couple $1,000. So there you go. Good Samaritans do win. There are good people out there, believe it or not. And, I just thought that was worth mentioning because most of us never get the opportunity to, be put in that situation. And I think we all would think at first, could I get away with taking this somehow? Could I get away with this being mine? And I think the conclusion that you come to is you can't do that. You just can't do it. You can't do it for a number of reasons. Someone's going to come looking for that money. $500,000 is not the type of money that people just tend to forget about. Someone's going to come looking for it. And that could just mean bad things for you.
Sounds like the plot to a movie.
Exactly. In fact, there was one I just watched that was very similar to that called Killing Me Softly, which a lot of people thought was terrible, but I thought it was amazing. It's a Brad Pitt, James Gandolfini, Ray Liotta movie that's just came out last Friday. I thought it was awesome. I think the reviews, the people who are saying that it stinks, are clueless. They have no idea. It's great cinematography. It was a great movie. So, Mike, I gotta ask you this because there are people who are starting to believe less and less in the United States of America. Now, if you went to Korea or someplace in Asia, you wouldn't hear that. You would still probably hear things that maybe you can't go wrong in America. Invest in America, you're going to win. But a lot of the people are looking at what's happening with fiscal cliff, with the inability for Congress to get anything done, with the structure of our legislature being that if everyone can't agree, nothing happens, and it seems that we're still in the same stalemate we've been in for the last 4 years. They're getting very nervous. So what about, especially with taxes and all these things that are going on, what about investing in commercial real estate internationally? Is that something that can be done? Can you buy a piece of a building in Brazil if you like the economy there, for example?
Wow. Interesting timing. This morning at 9 o'clock, we had our investment committee meeting for my company. And from 9 to 10:30, we discussed it. And one of the things that we discussed as part of what we want to put on our platform for investing is some more international. Absolutely. We have to, you know that I try and talk about diversification in every possible way. Well, we are not diversified enough in our platform of what we're allowing and have available in the international world. We have some. We're going to have more because it's important that we're in a global economy now. It's a different animal. I lived in Korea. Funny you mentioned Korea. I lived in Korea, and they, for a very long time, saw the United States as the big strip mall in the sky. They just think of us as, wow, it's where you want to go. And I don't think it's the case anymore. I think that they understand, there's Samsung and Hyundai, and, they know that they are a very progressive society. And so there is a need from a diversification standpoint to have some international exposure, and we will be doing that.
Okay. I really, really believe in this. For a number of reasons. I mean, diversifying into real estate, especially if you don't have any real estate. I mean, think about how many people can't get into real estate right now, Gary. I mean, are you still seeing, for example, just financing being an issue for people who want to buy homes?
Yeah, it's a funny thing because there's two forces going on with financing. The interest rates are so low, so that on the one hand makes it so much easier to get a loan, but the banks are deathly afraid to foreclose. So they are verifying everything. I recently refinanced a property, and they literally were looking at deposits that I had made, and there was some small deposit, and they said, we want to see your deposit slip so we can see what went into that deposit. I mean, it's crazy what they're verifying, and that makes it harder.
Okay. So if we've got low inventory, very difficult to get financing for a lot of people, or even more difficult.
Yes.
Then it makes it even make more sense. There's people out there who want to invest their money in real estate. And so, and I get that. And this is a way that you can do it. It doesn't matter if you don't qualify. It doesn't matter what your credit is. You can invest in these securitized real estate investments. You can do it right through your IRA. You can do it through your own investing account. You can do it. You can take money out of a 401k, roll it over to a self-directed IRA, and then, invest that way. So it can be in your retirement or your investment account, either one. And if you're going to do that, I strongly suggest that you geographically become diverse as well, whether that's within the United States. You get into maybe a REIT that's got stuff all over the place, or you get into some individual investments that kind of cover, the Midwest. Maybe you get something here in California, something in Texas, something on the East Coast. Or if you can do it globally, I think that's a really, really good idea because the bottom line is, Mike, right now there's no transparency. I mean, we don't know who's doing what. The only thing that we really know is that Brazil is self-sufficient. And everything else is a question mark. No one knows anything about anyone else. It's all a guessing game. because governments are making up numbers. Our government's guilty of it. China's guilty of it. No one really knows what's going on. So to try to pick who is going to emerge from the rubble here when this is all said and done, I think is too arrogant.
Diversify, diversify, diversify. I could probably name 20 different ways you can diversify a portfolio just within real estate alone. It could be geographically. It could be by asset class. Is it going to be multifamily or office or whatever else? Is it going to be by the product providers? Is it international versus domestic? There are so many ways. And so if you take your slice of the pie that you're going to put into real estate and you divide it up into as many different slices as you can make, it really is almost a mutual fund mentality. That's really what mutual funds were, right? We're putting together a bunch of different stocks and it's going to develop an overall return. We're going to do the same thing with real estate. It's going to be diverse in lots of different ways.
Yeah, and this is, we're talking about commercial real estate, so multifamily stuff for residential, commercial buildings, skyscrapers, office buildings like the one that we're broadcasting from right here. These are the types of things that you're investing on the securitized side. This is really something for everyone. This makes sense for everybody, whether you're young or whether you're nearing a retirement age. Maybe you're in retirement, you want income. This is a great way to get that and have an asset behind it, not just own a piece of paper. I really suggest you call Mike today and find out more. He'll also give you the top 10 markets for opportunity in commercial real estate, 100% free. 855-462-1031 is the number, 855-462-1031. So, Gary Kent, it was fantastic to have you in here today. You've given us a ton of good information, mistakes not to make selling your home. I'm going to suggest especially if you're a first-time seller, we always say first-time buyer, we forget about first-time sellers. You don't know what you're doing, okay? It's the first time you ever sold a house. You have no idea what you're doing. You think, oh, well, I'm just going to call the agent who I bought my house with. Oh, okay, you have a good relationship, whatever, that makes sense. But listen, if you are not 100% confident in a real estate agent that you feel comfortable with, take Gary's experience and use it directly to your advantage. You can access him 100% free through the helpline. 888-0154 is the number. It's 888-888-0154. And today he'll give you 2 free guides when you call. The first one is how to sell your home for top dollar and fast. And the second one, for a lot of people who want to be discreet, you don't want people up in your business. You don't want people asking you what's going on. Are you selling the house? Why are you selling the house? How much are you selling it for? You don't want people messing with you and you want to sell your house. Gary will show you how you can sell your home without ever putting it on the market. He has the ability to do that. 888-888-0154. Email through MrCreditRadio.com. Great job today, guys. Gary Kent, appreciate you, my friend.
Thank you.
Mr. Everywhere, Mike Bendix, as always.
Thank you,
sir.
Derek.
Appreciate you. Adam Scott, well done. Big Block Radio coming up next. Stick around. These guys are good. We'll see you next week. Everyone have good.